Okay, good day everyone. We are from Group 3 and here will be our video presentation of the Bradmark case of Chapter 9, the revenue cycle. Our group consists of me, Benedict Hanzen, and then there's Bernadhita Wardhana, and there's also Bima Mahardika, Gabriel Elvandy, Jeremy Subiakto, and last but not least, Ivan Aptarafi. Now, let's jump into the questions. For the first question, from the case description and the associated flowchart, assess Bradmark's internal control over its revenue cycle procedures. For its revenue cycle procedure, there are 5 main steps or procedure in the Bradmark case. First is the sales department. Second is going to the warehouse or warehouse department. Third is the shipping department. Fourth, there's the billing. And last but not least, the cash receipts. Now, let's jump into the sales department. Now, in sales department, the employee or the clerk of the store will notify or give the order towards the credit manager to get an approval. Here, the clerk or the employee cannot approve the order by himself cannot approve the order by himself, and as well for the clerk for the credit manager must not change the credit limit of the order itself. Now, after the order has been approved and then continuing on, we are going to the warehouse department. Now, after the order being approved, the employee can confirm the warehouse of how many orders are being made. And here, not forgetting itself, the warehouse will create a packing slip and shipping notice, and last but not least, the bill of lading, and it must be prepared. So everything will be prepared and nothing will be lost. For the third part, or the third procedure, is going through the shipping department. Now, in the shipping department, after orders are received, orders are being shipped, and not forgetting to insert the shipping logs into the system. Here, to better understand and to better calculate for everyone to check, and also later on for the auditor to check, the orders after being received must be added to the shipping logs, so the data can be stored and can be seen by everyone and can be systematically and neatly intact. For the fourth procedure is the billing. Here, or while orders are being shipped, the system will automatically create a customer's invoice. And last but not least, the cash receipt. The record of the transaction, especially the number of the invoice, will be then inputted to the system. So that's for the internal control for the first question. Moving on for the audit objective. Here, there are 4 management assertions. There is first the existence or occurrence. Second is the completeness. Third is the valuation or allocation. Last but not least, the accuracy. For the audit objective of the first one, it must verify the AR, the account receivable represents amount that actually owe to Bradmark. And using ACL, it will prepare account receivable listing and select the account receivable for the confirmation of samples. Now, let's go into the second management assertion, which is the completeness. Here, the audit objective must verify that all amounts owing to the Bradmark on the balance sheets are referred to in the account receivable. And also, the audit objective here is also to examine all sales receipts for transported products as well as the returns and allowance. And using ACL, it needs to mark the anomaly invoices and to review the reconciling processing. For the third management assertion, which is the valuation or allocation, the audit objective is to establish a suitable allocation for uncollectible accounts based on the account receivable balance expressed in the net realizable value. For the audit procedure itself, using ACL to derive the account receivable in order to review it with the payment files. And last but not least, the accuracy. For the accuracy, we must check the revenue transactions that are calculated correctly using the proper prices and quantities, and that all files are free of missing or duplicate items. And same as before, using ACL to compare prices of all invoices and to review if there is any missing or double invoices. And for the third and fourth question will be continued on by my colleagues.
So, good day, Mr. and friends. My name is Subiakto, and I'm going to present and I'm going to continue what my colleague Benedict Hanzen have previously presented. So, my name is Subiakto with the NIU of 45441, and today I'm going to present how to do the ACL in the Bradmark case. So, we're heading on to the shipping mark, and then with the join tables, we select the sales invoice. We combine these two different tables. We select invoice number in the primary keys, secondary keys, invoice number. Okay, primary fields we set invoice number, customer number, ship date. Okay, secondary fields we set due date, customer number, payment number, sales date, and then the amount due. Yes. Then we type sales underscore ship. Yes, yes. Okay, as you can see here, this is the number records of the sales ship. There are invoice number, customer number, ship date, due date, customer number, payment number, sales date, and amount due. And then for the next part, and then the next thing we need to do is to uh, look for the duplicate. So first of all, we need to select in the invoice table. We're moving on to the sales invoice, and then we select analyze, look for gaps, invoice number, don't forget to screen. Okay, then we select OK. So as we can see here, there are 173 gap strengths detected, 13,696 missing items, and as we can see here, the gaps found within is the right here. In the next part, we go back to sales invoice. We uh, do the so we're gonna assess the evaluation and allocation. So the company, so we need to perform and look for duplicates in the sales invoice table. We select we left table, we select invoice number. In the right table, we select all. Okay, output screen. Then like always, we select OK. Okay, as we can see here, there are no duplicates detected in the sales invoice table. And then we're going to go to find the outstanding account receivable. So so we need to find the outstanding account receivable by filtering the sales invoice with the due date of 31st December 2004. So how do we do it? So uh, applying filter, we select total fields, and then we select amount due. Okay. Okay, so as we can hear, see right here, there are 5,000 here, and so in the next part, we're going to analyze the certify the sales invoice. So we found in the amount of the receivable in each range. So how do we do it? So we go to certify, we select amount due, we select a minimum of minus minus 584.22, and the maximum of 37895 in the intervals of 10. Bottom screen. Okay, we select the command do. Okay, okay, okay. In here we can see the sales invoice in the amount due column. There is count, percent of amount of due. So in the total we can see right here 100%, total count of 700. So the next thing we need to do is classify the to find the amount of due of each invoices. So how do we do it? So we click classify, we select customer number, and there's amount due screen. Okay, so okay. As you can see here, this is the classified the sales invoice. There is customer number, count, percent of field, and the amount of due. So what we do here is we find the amount due of the sales that have been listed in the account, the sales invoice. This is the result after we classify the sales invoice. Moving on to the next part. So we're going to assess the accuracy of this project. So how do we do it? So we do certify non-due. We select, yeah, sorry, we minus one maximum of 381.2 plus that, and then I'm sorry, different table. So certify minus 6.7. So maximum of 3.1.2. Then we select split. This select the unit cost. Okay, okay. As we can see here, this is the certification of the inventory. The minimum inventory was 0 and the maximum inventory was 344. That is market value, the count, percent of field, and unit cost. Moving on to the next part, we need to certify the unit cost in inventory table to find the amount of cost of inventory sold. So what we do here, we go again to certify inventory, certify the cost, and then we price minimum of 0, the maximum of 300.2.4, first center screen, and then sell price. So let's put on hand the order point, market value, unit cost. Okay, that's okay. As we can see here, that is the unit cost, count, percent of field, sell price, quantity on hand, the order point, market value, and the unit cost. So what we do next, I think, go to the inventory, We need to perform the conif comment. So how do we do it? So we conif check if we select the quantity on hand, and then we write this down. Okay, so as we can see, the condition is if the quantity of on hand in the inventory table, if condition is one records of that. So I think that's it for my presentation on this ACL table for this Bradmark, guys. Thank you for listening. Have a good day.
Okay, so now I'm going to explain it to you about the first two questions from chapter 10, expenditure cycle. For the first question is from the case description and the assisted flowchart. Assess benchmarks internal control over its expenditure cycle procedure. So from our analysis, we think that the product receipt system is still not user friendly, meaning that it's not really easy to to use for the first time. And for the second one is if an entry error occurs, the receiving report must be canceled and redone. And the third one is it is also time consuming, so it is not efficient. And the last one is management can mitigate by having plan documents so that officer do not enter manually and only enter the number of goods received, so it's more automatically. So the second question is using the case description, the flowchart, and the file structure and financial data below, specify an audit objective for each management assertion presented in the matrix below. For each audit objective, briefly describe the ACL task procedure. So we selected the financial data from the case, the inventory balance at the December 31st, 2014. And as you can see on the table, we managed to divide the management assertion by the completeness, valuation or allocation, and accuracy. So between the audit objective and audit procedure to be performed using ACL, within the completeness is that the audit objective is review the account payable figure reflects all purchases that occurred and were received during period. And for the audit procedure to be performed using ACL, it is track and create logic, and then it sum up to for voucher pay. For the valuation or the allocation, the thing that the objective is verify that the inventory balance is reported at net realizable value. And for the audit procedure to be performed using ACL, it used the duplicate feature to see if there are repeat transaction and using classify to find the anomaly. For the accuracy with audit, pardon me, for the accuracy, audit objective is verify that payments to vendor accurately and it reflect the amounts owed. And for the audit procedure to be performed using ACL is show the joint table to unify the purchase order file and the voucher files, and use the filter in the joint table to see the amount in the purchase order and vouchers that are not the same. For the next question will be explained to with my colleague Ifan. Thank you.
Okay, so for the step number 3, we will perform the ACL of our group's step 2 procedure. For the completeness assertion procedure in the ACL, first of all, we make a relationship between the receive report and also the pay voucher. After that, we can extract and make the logic listed here. Okay, so here are the unrecorded liability that this company have. So next we are going to test the valuation or the allocation assertion. So the first way to test it in ACL is to use the duplicates feature to test if there are duplicate transactions. Because if there are duplicate transactions, the value of the payable will be different from the original. And the next step is to use classify to find anomalies that occurs related to vendors who are new or rarely collaborated with. Okay, so we are going to analyze and look for the duplicates. And in the first column, you search for the voucher name. Oops. Then analyze, look for duplicates. Okay. As you can see, there are no duplication because we see from the voucher number. So there are no transactions is given. Okay. Okay. The next step is to use classify to find anomalies that occur related to vendors who are new or rarely collaborated with. Classify. Okay, here are the results of classifying, where we can see some anomalies where there are several new vendors whose transactions only have a few. Okay. Okay, so next is the accuracy assertion, which the goal is to verify that the account payable already recorded correctly. And there are two procedures that can be performed at the ACL to test this assertion. The first is to use join table to unify the purchase order file and the voucher file. Other than that, that is to use a filter in the join table to see the amount in the purchase order file and voucher at that are not the same. Itu. shipping log. It's valid. It can be seen that this is a transaction that lacks accuracy because the extra cost and the full amount are not the same, as you can see here. So I think that is it for me. Going to next to the chapter 12 and will be explained by my colleague. Thank you.
Okay, now I'm going to continue to try to perform the ACL practice on chapter 12, which is the fraud detection. In the chapter 12, we have three categories of practice. The first one is payment to fictitious vendor. Second one is payroll fraud. The third one is lapping account. Okay, for the first one, in the payment to fictitious vendor, there are several tests that we can conduct. The first one is sequential invoice numbers, then vendors with employee address, multiple companies with the same address, and invoice amount slightly below the review threshold. Okay, now I'm going to try to perform for the first practice or the first detection, which is to test the sequential invoice numbers. What we're going to do is we're going to relate the sales invoice table with the vendor table that contain the required data, which is the invoice number and the vendor number. What we have to do is first we're going to choose data, and then we relay table, then we choose sales invoice, and then we add table of vendor. Okay, and then we're going to relate the invoice number with the vendor number. Then we click finish. Okay. After we relate both table, we move on in the sales invoice, and then we choose the sort record. Click data, sort record, sort on. In the sales invoice, we choose invoice number. When we move it to selected field, and then we choose from the dropdown vendors, and then we move vendor number to selected field. Then we click OK. The output is we're going to put it in the new table. We're going to name it sequential underscore invoice number. Now click OK. And here is the result showing the sequential invoice number. Okay, what we're going to do next is we're going to perform the test on vendors with employee address. The first thing that we should do is we open the vendor table, and then we're going to relate it with the employee data. We do the same procedure, select data, and then we relay table, and we choose a table of employee. Then we're going to relate the street or the vendor's address with the employee address. Then we click finish. Okay, in the vendor, we're going to add a data from the employee table, which is the first name. Over here, we click it, and then we right click on it, and then we add column. From the add column, we choose from the employee, then we choose first name. Then we click OK. Okay, and to check whether is there any similarity between the employee's address and the vendor address, we click quick filter and then not equal. And here showing there are no similarity between employees address and vendor's address. Okay, so what we're going to do next is we're going to see the multiple companies similarity with the address. First, what we're going to do is we're going to look for the duplicates. We click analyze, look for duplicates, duplicates on. We choose the street, click OK. In the list field, we click at all, and OK. For the output, we choose to the screen. Then click OK. And here is the result that showing there are 3 duplicates detected that the auditor should do more check on the name list here. Okay. Next, for the next test in the fictitious payment to fictitious vendor, we're going to test the invoice amount slightly below the review threshold. Okay, the first thing that we're going to do is we open the voucher pay, and sorry, we should save it first, and then we open the voucher pay, and then we're going to edit new filter. Then we click full amount less than 0 or full amount more than 25,000. Then first, before we click OK, we verify the expression, and the expression is valid. Then click OK. Okay, over here, it is showing the data that the invoice amount is slightly below the review threshold. Okay, I think that's all from the payment to fictitious vendor. The next part is the payroll fraud. In payroll fraud, there are also several tests that we can do. The first one is test for duplicate payments and test for non-existent employees. For the test for duplicate payment, what we're going to do is first we open employee table, and then we click analyze, then we click look for duplicates. In the duplicates on, we're going to try to see the duplication in the first name and last name, in the field of the employee address. And then we click OK. And here showing that there are no duplicates detected in terms of first name and last name with the employee's address. We also can check other components in the look for duplicates. The next duplication that we can test is we're going to look for the same name with different employees number. We click analyze, look for duplicates. In the duplicates on, we choose first name and then last name. Then we click OK. In the list field, we choose employee number. Then we click OK. Then click OK. Here also showing that there's 0 duplicates detected. And the next thing that we can do is look for duplicates on the employee address. In the list field, we choose the first name and last name. Click OK. Over here, we have the same address with different employees' name. Because of this, the auditor should conduct more tests or more checking on this particular person, James Jefferson and Ethel Snyder. Okay, for the next part in the payroll fraud will be continued to be explained by my colleague. Thank you.
Okay, so here I will continue the presentation from Bima. First, we will going to perform the test for duplicates once again, however, in a different file. So here we open the employee file, and then we click analyze, and then look for duplicates. Here we will choose the phone number, and then we will compare it in the list fields using the all fields, and then we click OK. The output should be on screen, and then we click OK. So here, what the auditor is trying to find is the duplication between the phone number and then under information that shows differences. We can see that in there are 10 duplicates detected, and then from the phone number 0672, with the same birth date and all that things or information, there are several informations that have difference. Here we can see that 0672, the first name is Jennifer, while the second file shows a different first name. So actually the duplicates found could not be used as a determination or as a reason that for auditor to determine that there is a fraud or not. However, it could give a base for them for further searching or auditing. There is also a phenomena called the natural phenomena, which shows that duplicate happens naturally without indication of any fraud that could happen. We will continue by testing for lapping accounts receivable. So lapping accounts receivable have been explained in previous chapter, but in short, it shows a theft in the customer checks received or the cash receipt in the payment caused by the perpetrator inside the company itself. So while the customer already paid, but the cash receipts listed in the company file has not showed that the customer have paid. For that, we can find the fraud by looking at the cash receipts and the remittance number, also remittance amount, and also the due date. So actually, to find the fraud in accounts receivable, the only thing to be considered is the time difference between the customer have paid, the date that customer have paid, and the date the customer receipts were reported or created. So the time difference will show an indication of fraud. To do that, in here we will need to relate between the sales invoice table with the cash receipt table. So we will click data and then relate tables, and then it already shows a relation between the sales invoice as a parent and cash receipts as another key. We will try to repeat it once again by deleting all. So here the cash receipt cannot be deleted, so we will just connect between the remittance number in the sales invoice or parent with the remittance number in the cash receipt. We'll do this by doing this, and then we click finish. So after relating the two, we can now show the information or the file inside the cash receipts in the sales invoice file. For example, we will transfer the cash receipts amount from the cash receipt file into the sales invoice by adding columns. We will choose the cash receipt table, and then for the field we will choose the cash receipt amount, and then we click OK. So here is the information or the data, and then we right click by modifying the columns, and then we will change it to the remittance amount. This is done just so we could see it in an easier point of view. And then another one, we will try to subtract between the amount due and the remittance amount to see whether there is any fraud that could be detected. We could do that by adding another columns, And then we will use the expression. We will choose the amount due, and then we will subtract it to the cash receipt amount. And then we click OK. So here we can see the result. 0 means that the payment has been done, and then the cash according to the cash receipt, and the amount is equal, so there are no problems with the result in 0. However, we could see that there are positive. So here the positive means that the amount due is still bigger than the cash received amount, which means that the customer should add, for an example, 2,258.7 more to complete their payment according to the number listed in the amount due. From this information, the auditor could see whether there are fraud or not because of the difference. We will continue. I'm so sorry because there's a problem in opening the look for duplicates feature, because when we click it, it already shows a duplicate without we choose the duplicates on and the list fields to compare with. Here we will click OK, and then we will click screen, and then in the main we will choose the duplicates, which is already chosen the amount due minus cash receipts. While for the list fields we will choose the due date. There are actually several choices or variation. I will try to use mine, and then we will choose the customer number, invoice number, sales date, and the remittance number. We will perform the duplicates because in doing the fraud, the perpetrator must use the carry forward way, or once they do the fraud, and then that means he or she should do it and over and over again, meaning that they will report the same balance with the same invoice number to the same customer in different period. So that's what it means by carried forward. The duplication objective is to find that, and then here we will click OK. So here we will see several information. So according to this, we didn't find any similar invoice number with similar remittance number in a different date. However, maybe the auditor could find a better perspective, or a more detailed perspective that could find a fraud here. If we see, we only see like the customer number. There are several duplications in customer number, for example, in 516.372. However, with the same due date, and then the sales date is also the same, and the remittance number is different. So I think that's all from this chapter. Maybe it will be continued by another one of our colleagues. Thank you.